looks like we're live. Let me know if you can hear me well and see me well. The title of tonight London time live stream is Sovereign Bond Markets in for a rough September. And it could be even worse than rough, but uh, you learn in markets and in life that things don't happen all at once. But yeah, we're gonna look at that. Clive is coming on tonight as usual. And yeah, Rudy is here on the sofa. And again, I'd like to thank all of you for being here already. I'd like to thank MM for his super chat. Thank you very much. So we've got Darren Smith is here, just AB Esquire, 40 ounces of freedom. Olivier Leroy, Chris Conman is here, recently retired. Rick Waugh is here as well. Charger Mopar says he can hear me. Justin Taylor says evening Mario and Rudy. 40 ounces of freedom says looking and sounding good, Mario. Yeah, and start asking me questions because sometimes it's difficult to go through all the comments. There's a lot of spam, unfortunately. I try to delete them, but yeah, it's unfortunate. Mark C5155 from Billericay in Essex. Hi-Ho Silver K5X. Chris Conman again. Shantian D. Jr., good evening, Marion Rudy. Gifted and broke. Let's hope that handle changes. Gifted and broke says, hi, Marion Rudy. Dutch Libertarian, good day, Monaco 64, Rudy and Clive. Christopher Ray, hi, Mary. What are your thoughts on Richard Werner's credit creation theory? Well, I think he's right about how credit is created, that it's created by bank loans. Yeah, uh, uh, that's how it's created. Like when a bank makes a loan to you, it credits your current account, and yes, it creates currency out of thin air. So it's nothing new. I mean, I've listened to Werner, and I did years ago. I think I have one of his books, Ministry of Finance. I think he's the guy who advised the Japanese to do QE, or it's not really money printing because it's not real money, but credit creation out of thin air. He's not much of a gold bug, though. One of the things he says that's really interesting, though, is how the German banking system is very decentralized. Yes, there's a few big German banks like Deutsche Bank, Commerzbank, but there's loads of little regional banks or Landesbanks and also community banks, which is something we don't have in the UK. And it's much easier when you are close to a small community and you're a small bank. It helps small businesses. Of course, we're going to talk about Germany today because unfortunately, Germany is surprising us not in a good way, fiscally and economically. Mr. Money 2511 says, hello, Mario from Richmond, Virginia. Uh, Great. The old capital of the Confederacy. Uh, Winter Night 6689 says, hi, Mario from Italy. Great. Great to have people from Italy here as well. Michael Kennedy says, good evening, Mario. Uh, Thank you, PSA, for your super chat. On a cruise with no service. Missed you all week. Well, at least you were on a cruise. That's great. I hope you had a good time. How's Rudy? Oh, he's great. I took him to the vets Saturday morning, yesterday morning at 8 o'clock. We had the first appointment. He had his last antibiotic yesterday afternoon, and the vet said he's fine now, so he's doing great. I'm glad he doesn't have to wear his cone of shame anymore. He didn't have to wear it that long though. He's fine. Richard Pickering, Mary, do you still stand by your Gold Mining Inc. recommendation? Well, I think the mining sector is all, is going to do very well, including Gold Mining Inc. And a lot of the videos, well, these videos that I do for mining companies, yes, they are companies that I think are good companies, but they also are very small companies that want more exposure. It's one of the reasons I do it, and I always tell people that they need to do their homework. But yes, Gold Mining Inc. is a good company as well, I think. Uh, They are lying to you, Mario. I'm hearing that there is going to be a stiff rise in inflation September onwards. Any truth in the Well, I guess when they say inflation, they mean the CPI. Yeah, it might. I haven't really looked, where CPI was a year from September. It might kick in, but you can be sure that CPI, or what they call inflation, is going to keep rising as long as the central banks can print money. If you look at a chart of the CPI index itself, for the last 60 years. It's always, especially after 1971, it's always been going up. There was a little tiny blip at the end of 2008 when we had the great financial crisis and the recession. It dropped. But look what they did for that little blip. They started massive QE. They bailed out the banks. So I wouldn't worry about what they tell you about inflation. It's usually not the truth, I would say. Think just replace Klaus Schwab as head of the World Economic Forum. Yeah, I know that's not surprising to me. Richard Pickering, Mary, do you still stand by Gold Mining Inc. recommendation? Yeah, I think I've answered that already. Sorry. I'm Mary. Oh, yeah, we've got Sandy Cabeza from Vero Beach. Great. My niece lives in Vero Beach, and I spent my part of my honeymoon in Vero Beach back in 1993. Yeah, I used to go there a lot. It's a nice place. Jeff Sanderson from Texas says hello. Lovely voice. Mario, hello, Mario, Rudy, and Clive. Yeah, we're still waiting for Clive. He'll be on soon. William PMC, any further comment on the Nome of Zurich forecast? Well, yeah, I mean, he's still very bullish, the precious metals. I mean, some of his forecast price levels haven't come to fruition. He's bearish the bond markets as well. So that's all I can say. I mean, he's a really nice guy. I met him back in November, and we talk regularly. He likes Elliott wave analysis, which is something that I haven't done that much, but yeah, he still has the same thinking, that fiat currencies are doomed. Michael Kennedy, UK 30-year bond approaching, well, it's near 5.5%. We're going to look at that. We're also going to look at German government bonds, especially the 30-year. Wavy McFly from the Hamptons in New York. Yeah, the weather, wonderful weather there. It's been wonderful here in England too, in London. I played golf this morning. It was perfect weather, no complaints. Uh, Time lapse 49.89. If bond sale is poor, the Fed can step in and buy up. Yeah, yeah, they can always do that. MM12684 says Clive's channel has been on fire lately. Yeah, no, it's good. Clive has started his own channel and he's doing well. Gene Gino Motrin from North Carolina says hello. Ole Schauman, gold price seems to have gone into hibernation. Yeah, been in a consolidation. That's normal, I would say. I think with what's happened in Alaska with this summit, this should help gold. I think uh, I definitely think it should because yeah, I think things are not really gonna get better geopolitically. But the other thing as well, it seems like President Trump has been very accommodating to Russia and BRICS as well, especially Russia and China, which and BRICS. Russia was not just negotiating on behalf of Russia in Alaska, but also BRICS, because President Trump said that for now he's not going to put tariffs on Russia for buying, or on China, excuse me, for buying Russian oil. So, yeah, it looks like the US, especially President Trump, is basically accepting like a multipolar world, I would say. And that should be positive for BRICS and negative for the dollar. And I don't think Trump has a problem with the dollar being weaker. Uh, so, hi, Clive. Nice to see you.
Hello. Good evening, Mario. Good evening to all your viewers.
Yeah, yeah,
Good to
Clive.
see you all.
Yeah, nice to see you as well, Clive. Someone just said that your channel is on fire. I said, yes, Clive started his channel. He's doing well. I'm glad
Well,
to hear
thank you.
that.
All I can say is thank you. Thank you to you, Mario. You got me started.
Yeah, I remember, the first interview we did. That was November 2022. You'd never been on YouTube, but here we are, and great. Uh, Clive, someone's asking, Mario, do you think the markets will fall? Well, it's difficult to say because the stock markets have been, yeah, they've been fairly strong and they've been fooling a lot of the bears. The metrics are very stretched, but the markets keep making new highs. As for gold and silver, I think what happened in Alaska is very positive for gold. I see that Zelensky came out an hour or so ago, or maybe more, saying that he will not accept giving territory to Russia. Yes, they're flying to Washington, like Zelensky and European leaders, to talk to Trump tomorrow. But Clive, I was saying that it looks like Trump has been quite accommodative to Russia and also BRICS indirectly. So, if anything, that should be very positive for gold. What do you think?
Well, I think the news which is coming out of the United States, and it's only coming out of the United States at this moment, is very confusing. You may not have seen it, but in the last hour, there's been across all the news wires an announcement that, and I'll just read it to you, that this is from the envoy, Trump's envoy at the meeting. He says that Russia has agreed to Article 5 like protection, which is basically, to all intents and purposes, NATO protection of Ukraine. I can't I don't actually believe. I know perhaps Mr. Witkoff's been on the vodka, or perhaps Mr. Maybe Vladimir, not Vladimir, Mr. Putin was on the vodka, or maybe I'm dreaming, but it doesn't sound right that Russia would
Yeah.
just cave in that easily. So I don't know what's going on here. It makes me question if we're getting a proper news flow here.
Yeah, so that was Witkoff who said that.
That's right. Yes, Steve
Yeah.
Witkoff.
I mean, I don't think Russia, I don't, of course, they don't want Ukraine being part of NATO. Ideally, they want Ukraine to be neutral, but this Article 5 is a clause in NATO that they will defend any country that's part of NATO if it's invaded. But if they can apply this Article 5 to Ukraine without Ukraine being part of NATO, it's almost as good as Ukraine being part of NATO. So
Yeah.
I don't think the Russians would accept that. But Clive,
I can't see them accepting it.
yeah,
So
no.
I think the markets go down on Monday is my answer.
Oh, okay, okay. What about gold and silver? What do you think?
Well, the we what we're now in a situation of much higher uncertainty, and I don't think Mr. Zelensky is going to agree to anything either. At least not if it means giving up territory. So I think we're in a period of greater uncertainty. Probably gold, at worst, it stays steady. At best, it goes up.
Yeah, I think maybe we're just about to break out and break out of this consolidation we've had since April. Who knows? But anyway, long term, Clive, I'm still trying to stack as much gold and silver as possible. And also the miners are doing really well, which is encouraging. But let's bring up this chart here, Clive. This is the 30-year Buxel, it's called. It's the German government bond, 30-year. And, if you told me 5 years ago that Germany might trigger the sovereign, well, there's a sovereign debt crisis in 2011, 2012. It was mainly the periphery in Europe. But if you told me that Germany might start the next sovereign debt crisis, I would say you're crazy. And why is that? Well, because Germany has been always very frugal. I mean, up until 2020, their national debt to GDP, government debt to GDP was less than 60%. They're running a budget surplus. Yeah, very how can I say, very frugal. And their economy wasn't doing well, Clive, but their GDP was fairly anemic, but they weren't doing all the deficit spending. But now everything is Germany is turned upside down. And this chart, this is the price, not the yield. But if you, as you see here, we're at, I mean,
3.36% yield.
yeah, but 12-year lows, this chart looks very bearish. So
Yes. So Germany's going to have to spend a lot more on defense going forwards,
yeah,
and that means borrowing a lot more. It means that the supply of German government bonds goes up, and the market's got indigestion because the bond price
yeah.
goes down.
The thing is that it's such a benchmark market for especially Europe that it could spill over. And I have a look at some other ones here. Well, the UK, we know, Clive, unfortunately, fiscally, it's a basket case. You see here, this was the Liz Truss Kwarteng budget, but we're way above that in the 30-year gilt. And last week, last week, as you can see, we almost touched 6.6, so it's not looking good either. And then we've got the Japanese 10-year yield, and this is what is the highest level this century almost. This is from 2000, and that's the US 30-year yield. Is still holding up, but if we break above, like I think it's 510, that's going to be very serious. And then we even got the French 10-year yield, Clive. It's really breaking out. And what's funny is that the French 10-year yield is higher than the Italian, which is very unusual. So I'll let you chime in on what you think this is telling us, and then I'll give my opinion.
Well, it doesn't really matter where we look in the world. These long dated, the 30-year yields are moving up. It's not an all-time peak in America, but it's as near as makes no difference. It's at 4.98%. I think the peak was at 5 point in recent years anyway, at 5.2 or something like that in the USA. Canada, the yield is pushing through the high. I'm just looking at the Canada one, 30-year yield, 3.85. Yes, it's the high point was 3.89. It's at 3.88 at the moment in
Yeah.
Canada. So it's basically at the highest point for many, many. I'm just going back to see how many years. It looks like forever. Belgium, of course, is doing what France is doing. The yield is going up and up. The only place where you won't find that happening is Switzerland, where the yield is falling.
Yeah, I guess Switzerland is still a safe haven, but eventually I would say, uh, my opinion, these bond markets are telling me that things are not good, and the West has spent a lot of funds supporting Ukraine, and I think Ukraine's going to lose. And also those 300 billion that they froze from Russia. I don't know what's going to happen to that. And they borrowed a lot of money on the back of that. So yeah, I think things could get very interesting in the US as well. The debt is going through the roof. And
Well,
I think Japan's still a huge problem.
I mean, I think the bottom line here is the word is slowly leaking out to a wider audience who have said, traditionally said, oh, it's the USA, the bond market's fine, they're never going to default. And of course, that's true, they won't default. But there's been a long-standing belief that everything's going to be all right because it always has been. It's like on a summer day and it hasn't rained for weeks. You're expecting it to be sunny tomorrow, but you never know that thunderstorm can turn up from nowhere. And I think we're kind of in that situation where now people are starting to say, how long can this last? This borrowing by government, where they now seem to think that they can and should and must borrow ever greater amounts year after year, and there'll come a point when the music comes up. We're getting the interest rate on this borrowing is rising rapidly. In the United States alone, in 3 years, the interest expense as a share of the revenue being taken has moved from 8% of the tax take to 18% of the tax take. Congressional Budget Office says it's going to, a couple of years, it'll be 22%. I think it's going to be a little bit higher than that and moving ahead much faster than the CBO is forecasting. So, in my opinion, we're going to get to a situation probably within a decade, if it lasts that long, where the interest expense is as much as the tax take in total.
Yeah, yeah. No, I agree. Someone's asking here, William, please, wonder if you have any comment on precious metals junior mining in Ontario, Canada. Well, I mean, I don't have a particular opinion on a particular junior miner in Ontario, but I would say Canada is always a good jurisdiction. It's very stable, I would say, as a jurisdiction. So I don't see any problems with it. Is that the way you see it, Clive?
Well, first of all, I think there's juniors which make money because they're digging stuff up and selling it, and juniors which are prospecting, looking for the gold. And they do say that under every prospector's gold mine, there's a hole with a liar sitting on the top. So one has to be very careful when you're buying into gold mines which you don't yet have any production and aren't
Yeah.
actually selling anything. One of them will be a 40 bagger or maybe a 100 bagger,
Yeah.
but you might buy 99 others which end up as empty holes in the ground and abandoned.
Yeah.
So if you diversify and buy, for example, a diversified exchange traded fund investing in the juniors, you'll probably be all right. But if
Yeah.
you try and pick and choose between them, you've got to have a skill set which is very, very high to determine those which are spinning you a story and those which have really found the gold. And if they do find the gold, the next question I've got is where are they going to get the money to dig it up from?
Yeah. Indy says, Mary, USPS tracking still shows that it is waiting to be picked up. Yeah, you sent me something to Gold Investments. So I don't go there regularly. So the next time I go there to see Oliver and Simon, I will talk to them about that. I mean, I will pay for the fee, but I can't do it from here. I need to go there and talk to them. Anyway, I'm sorry about that, Indy. Let's see if there are any other questions. Someone thinks that 10 years, I guess, I don't know which 10-year you're talking about, really cold, 3991 is headed below 4%. Specify the country. So anyway, maybe it's the US. It might go below 4%, but Clive, I was warning already towards like 2019 that I thought the long-term bull market in bonds that started in the early 80s was long in the tooth, 40 years. And lo and behold, in 2020, yeah, yields collapsed during COVID when it kicked off, but that was the bottom, and we've been rising ever since. And I think a lot of people are still, especially on Wall Street, people are in denial, mainly because they've only lived in a bond bull market because they're young. They weren't around in the 70s and maybe early 80s to know that there are bear markets in bonds. And even in the early 90s, Clive, I remember US 30-year yield and 10-year at 7, 8, and 9. I remember the Italian government bond at 10, 11%. So I think people are going to get a shock. And of course, I'm not sure that QE is going to work this time unless they do massive amount of QE. And that, of course, will will propel gold and silver a lot higher, and they will do a lot better than bonds. So I think bonds in real terms are a really bad investment, and unfortunately, bonds are really important. Clive, maybe you want to tell the viewers why bonds are so important for the whole financial system and the economy.
Well, a lot of the borrowing going on in the economy. I mean, for example, the housing market is very much linked to the rate on bonds. So uh, when you borrow money on a mortgage, the rate you're going to be paying is, it might be, if you've got a very short overnight term, more what they call it in Switzerland, call it Saron based. I think they call it LIBOR in England. Maybe they've changed that now. But if you've got a short term mortgage, it might be linked to the local short term rate. But most mortgages are very long term and they have a longer term fixture of interest rates. So those fixtures are based on the bond market itself and the yield on the bond market. So what we've got in the world going on now is governments have to borrow more and more money because they're running out and they're spending more than they've ever spent. And the market, the buyers of those bonds, the natural buyers of the pension funds and things like that, they're starting to say, you know what, we've got enough bonds. We can't buy any more. We've got, we've had our 60-40 approach, but the more bonds you try to sell us, we can't squeeze them into the 40% bonds we're supposed to hold unless we sell something, sell some other bonds. So unless we get more pension money in. So it's getting very, very hard for governments to fund themselves except at higher rates. I'd just like to say one thing, Mario. If any of your viewers, I'm sure many of your viewers do have some sort of investment management account, and perhaps that would be in their pension fund, typically be in their pension fund, and it's being managed by third parties, have a look at the portfolio and see if your portfolio contains bond funds. In most cases, it will. And most cases, you're going to discover that those bond funds have been in the portfolio for quite a long time and that they are showing losses. All I can say is now is a really good time to ring up the investment manager and ask him his view as to why he thinks it's a good idea to continue to retain those bond funds at a time when interest rates are like longer term rates are likely to go higher due to the fact that governments can't control their borrowing.
Yeah, yeah, that's a good point there, and I think a lot of them, Clive, hold it because they think at maturity we'll get the 100 cents to that we invested or par amount, but it will be in a lot less. It would be in debased currency. That's the way I see it.
There's another danger I'd like to stress with bond funds. This is not so much for the Americans here, but all around Europe, people are invested in bond funds where the underlying is US bonds, and the reason for that is that's the biggest bond market in the world. There's a lot of choice, but it's currency hedged back to your domestic currency, and they do that so you don't suffer from the ups and downs in the currency. But there's two problems with that. The first one is the constant refreshing of the currency hedge every 3 months costs money. I mean, of course, they try and do it as frugally as they can with a narrow spread, but it's still costing them maybe 20, 30 basis points each quarter as they roll over the hedge. But the bigger problem is if something goes horribly wrong with one of the currencies, they may find that the loss on the currency hedge wipes out in extremis a lot of their bond fund. So it's a very dangerous, it's a perfectly safe game as long as currencies don't move around very much. But if
Yeah.
currencies have a lurch, it's a very dangerous game to have a hedged bond fund. And just about every pension fund in Europe is chock-a-block full of these hedged bond funds.
Mm. Uh, Lucky to live U3B. What are your thoughts on putting, say, 30,000 pounds into a Glint account for ease of access rather than leaving the money in a deposit account? Yeah, I think Glint is good. I mean, I've got a Glint card. But what I would do personally, if I had 30,000 like that, like you're saying, I would put maybe half in Glint and buy gold through them. And then the other half, I would buy physical gold like Sovereigns or Britannias, split it in two because with Glint, you get gold, exposure to gold, and you own gold, allocated gold, but you'll be liable to capital gains tax because you're not holding coins of the realm. But yeah, I would split it in two. Stephen Montplaisir, thank you for your super chat. Alberta, Manitoba, and Saskatchewan are leaving Carney's Canada. You guys need to check out Rebel News. North Dakota is going to be huge. I mean, I saw some months ago something about Alberta. There are a lot of people in those provinces in Canada that are unhappy about being part of the Dominion. I mean, the official name is the Dominion of Canada, I think. So, but I haven't, Rebel News, I know Rebel News, but I haven't seen any more news about that. Any opinion on that, Clive?
First I hear of it. What's the actual name of it when a country or a region of a country spins itself off from the rest of the country with the agreement of the parent country?
A secession?
Succession, is it?
Secession, SE,
Yeah.
yeah, secede from the Union. That's what a lot of the states did during the
So
war.
I don't know.
Yeah.
I don't think I don't. I mean, I know nothing about this, so I'd be surprised if Canada agrees to allowing parts of Canada to be hived off into separate countries or anything, if that's what they're proposing.
Well, I'm not sure, Clive. Maybe they don't have a choice if the people of those provinces vote, have a referendum, and they vote to leave. There might not be much they can do, but we'll keep that in mind.
What about the City of London then? Do you think they should have a vote to get rid of the rest of Britain?
Yeah, well, they're already quite powerful. I don't think they need to. They don't. I don't think. I think it's good to have Britain under their control because I think that's they're the people in control, and they have like the I remember I forgot his name. The City of London has always got someone in Parliament representing them,
Okay.
Remembrancer or something.
I didn't know that. Okay.
Yeah. Uh, let's see. Any more questions? Uh, Melania Trump letter to Putin. It's time. Yeah, I saw that. She wrote a letter to Putin saying we need peace. I'm not sure that's going to work. So, Clive, one of the things I think might happen. Oh, first, let's have a look here. Chris Conman, thank you for your super chat. If the US Treasury values gold to a point where the US government would pay off the national debt, what would happen to the financial landscape? Would the gold price continue to its ascent? I don't think they would pay off the whole debt personally. That would be, I mean, really inflationary, in my opinion. And they don't really need to do that. But if they did, gold would be like, yeah, it would be like a massive bull market.
It would have to be $150,000 or $140,000 to pay off the national debt. But of course, they can't just pay it off because this debt, some of it doesn't mature for another 30 years. So legally, you can't, I mean, illegally you could, but you can't legally go and say, we're changing the terms of your contract. You've got a 30-year bond at 5%. Well, actually, no, you haven't. We're giving you the cash now.
Yeah, I mean, yeah, it would be like a default, I would say. So yeah, it would be very yeah, chaotic, I would say. I mean, uh, it would be good for people who hold physical gold and silver, though.
Well, it'd be good, but the other trouble with that, at a certain level, everybody's going to be mining gold in their backyard, and there's going to be an awful lot of gold coming out of the ground to be sold to the U.S. Treasury. And I think it'd be a good move for them to revalue gold at a higher price than today, and therefore they would suck in some gold, but they don't want to suck in so much gold that they're totally overwhelmed by it.
Yeah. William asks, William PMCD, if gold is revalued by the US, what about silver? Would copper and platinum also be affected, adopted? Thank you. Yeah, I think the price of silver and copper and platinum and all commodities would go up a lot. But I'm not sure the US government would officially revalue silver. They would just revalue gold, and that would drag silver, platinum, and copper along with it.
Silver is a much smaller market than gold, so a little bit of money coming out of gold would make a big difference to the price of silver or platinum. And silver's 1/10 of gold in terms of market size, and platinum is 1/10 of silver. I talk very broadly speaking.
Yeah.
So any money going out of gold into those other metals would drive the price completely crazy.
Yeah. Belly Dance Arabia, question, if they revalue gold to 20,000, would that also make other countries rich who hold it? Of course it would. Yeah. I mean, some people speculate that China holds like a lot more than the 2,300 tons that they profess to hold. I mean, I guess it would help India as well. Indians hold a lot of gold, not just the government. What do you think?
Well, I mean, yes, it would help the value of whatever reserves they've got on the books. But the downside to that is, as we know, many of these countries are actively buying gold month after month, year after year, and this is going to make it a lot more expensive for them to convert their US Treasury holdings into gold. They won't be able to get as much gold for their Treasury holdings as they get today. So, in a way, they'd be happy with the revaluation, but they'd be unhappy that they can't do anything with their treasuries now except at a much worse price.
Hmm. Someone's saying here that grave diggers they take the gold out of cadavers' teeth. That's probably true. It's a bit yeah, it's strange, but have you
Well,
heard of that, Clive?
that was many hundreds of years ago. Whether it's still happening today, I doubt it, because these days, when you put somebody in a coffin, you usually have the family and friends gathered around the coffin when it's lowered into the grave, and then it's covered with dirt. So to imagine that the grave diggers come along working overtime in the middle of the night to dig it up in the hope of getting a gold tooth, I just don't think it's happening these days.
Yeah. Probably not. Maybe in some other more less developed countries. But yeah, here in the UK, they do a lot of cremation because there's not enough room anymore in the cemeteries. So yeah,
And maybe the guys who are sweeping out the ash from the crematoriums
yeah,
get the odd speck of gold from
yeah.
a melted gold tooth.
Steve Montplaisir, gold, $20.67 to 3,336 is 99.38 loss of purchasing power. Yeah. And also if you go on fxtalk.com and you do gold, the dollar versus gold, a gram of gold from August 15th, 1971 to now, it says it's dropped 99%. So yeah, and I think in 1971 it was 35. So I guess the day the dollar, the currency collapses and the other currencies will be the day, Clive, that you can't buy any more gold with the dollar or the euro or the pound. It's what's happened in Venezuela that you can't even buy anything with their currency. I saw a program that they even use Colombian currency in Venezuela.
Well, we nearly had this situation in 2008. I mean, I was working in a bank in 2008, and uh, it was very common for clients to ring up and buy gold or sell gold, and they'd buy physical gold bars, which we held in custody on their behalf. But as Lehman Brothers went down, the phones started ringing off the hook, people saying, maybe your bank's going down next, I'll buy gold, please. And because
Yeah,
the gold would be in custody, it wouldn't be a default of the bank.
yeah,
So I'd ring the Forex dealer and say, I've got a customer who wants to buy 10 kilos of gold, 20 kilos of gold, whatever it is. And the answer came back, well, he's going to have to wait because our normal suppliers are completely out of gold. They have to manufacture it, and it'll take 2, 3 weeks before we actually get restocked, or not we get restocked, before they get restocked. They can't deliver it. And the reason it was they're out of stock, because normally these banks, they have huge stocks of gold ready to be delivered. But when everybody comes on the same day saying, I want some gold, the shelves are empty. And they had to manufacture the bars. So a lot of clients were very distressed in that 3 week period, worrying whether their bank, the bank I was working for, would go bust in the
yeah.
interim. It didn't go bust, but that was the fear.
Yeah, that's an interesting point because there's a question here. Would the great taking imply to prefer physical precious metals above the precious metals miners? Yeah, I mean, I've read The Great Taking and I did a video that did really well a couple of few years ago about the Great Taking. And it's a possibility, the Great Taking, but it's not a certainty. So, yeah, I lean towards more towards having physical, but I also have minors, and you have to keep that in mind. And even if you don't have a great taking, your broker could go bust, and you might get your money back, but it could take months to get your money back. Just like
I,
what happened with MF Global, Clive, back in 2010.
I've read The Great Taking too, and um, there's a lot of interest in it. I'm probably getting a couple of questions a week where the word great taking is mentioned, typically in the context of how do I lay my hands on physical gold mining shares or something like that. Um, I'm probably going to upset a lot of people by saying I thought the book was over dramatic. I don't think, whilst a great taking situation can happen, i.e., you might have your assets held by an institution and you find you cannot get them back, even though they're not on the back on that institution's balance sheet. They're in custody for you, but you can't get them back for various reasons. That can happen, but it's not a legal situation. It's an illegal situation, and it's one which is not very likely to happen. Having said that, I say that knowing that I have been a victim of a great taking like situation when my asset, specifically Greek bonds, was taken off me by the European Central Bank to help themselves because they regarded that the saving of the euro system was more important than saving the man in the street. Of course, they didn't view
Yeah,
people who held Greek bonds as man in the street. They said it was wicked hedge funds who were
yeah.
profiting from the Greek situation.
Yeah,
So,
the
but
sorry.
I don't think I don't think it's a big risk. Realistically speaking, if you diversify your assets, if you diversify your custodian, and even better if you can diversify cut by country, it might happen, but you're very unlikely it to happen. If it does, they'll only get a little part of it.
Yeah.
And of
The,
course, you should have physical, like you say as well. I mean, but
yeah.
not 100% physical. You can't carry around your entire net worth in a bag of gold coins. You know, that's too dangerous from a safety perspective, and it's all the eggs in one basket.
The Weasel's Apprentice, Mario, they won't revalue gold without launching a digital dollar and pegging gold to it afterwards. Then they can control foreign debt by exchange, thereby controlling the euro-dollar system. Yeah, I mean, the euro-dollar system, the euro-dollar is like basically a dollar market outside the US. So, yeah, I'm not sure how, yeah, I mean, the way to control the euro dollar system, which is dollars flowing around outside the US, would be to impose capital controls. And I don't know if they want to do that. What do you think, Clive?
Well, you know, The Weasel's Apprentice, who wrote that, he's incredibly perceptive because I think he's hit the nail on the head because what he describes is it's a high probability scenario. I think we will get a digital dollar and euro and Swiss franc and pound and yen and everything else. I think it's coming, and at some point there's going to be a crisis. They're going to restore faith in the currency. They're going to link it to gold, and they're going to tell you that all your other money, which is not already in digital pounds, can't be converted. So you're left behind in a situation with two currencies, one which is convertible to gold, which you might be allowed to have £20,000 worth or $20,000 worth, and then you've got your 100,000 or million or whatever you happen to own in T-bills or cash or gilts or bunds or whatever it happens to be. And unfortunately, that's now a defunct currency because to all intents and purposes, you either need permission to convert it to the digital gold or you can't convert it at all.
Yeah. The other thing I wanted to mention about the bond market and the fact that yields are, especially in the longer end, like 10, 30 year, are rising, like in Japan, the US, Germany, the UK, is that, Clive, a lot of financial institutions, especially banks, they hold a lot of these bonds because well, they consider that risk free, and they've been, yeah, it's always worked in the last 40 years, and they think it's going to keep working. I think it's really dangerous. I think we could see a major banking crisis if these yields continue to rise, as I think they will. And what that will mean is your deposits in banks are not going to be safe. And when push comes to shove, the governments and central banks will bail them out again, and they're going to print and print and print. And it's one of the reasons I will hold on to gold and silver as long as I can, and I'll try to get more and more. Not because I think they're going to revalue gold, the US government. That's not the reason why I own gold and silver. It's because of that. And because this revaluation talk, Clive, has only started since Trump has come into office. So it's something new. I'm not saying it's not going to happen, but if it didn't happen, I wouldn't be annoyed about it.
Yeah. Well, you know, Judy Shelton spelled out in words of one syllable as to exactly how it could happen in the Bitcoin bill, which didn't pass into law, by the way. It's When committee never came out again. But in the Bitcoin bill, basically and it's written there in black and white how it'll work to revalue gold. Basically, the way it's worded, I haven't got the wording in front of me in front of my eyes, but it says the Treasury shall or no, the Federal Reserve will tender its gold certificates to the Treasury, and within 6 months, the Treasury will tender the market value of the gold back to the Federal Reserve, and the Federal Reserve shall pay to the Treasury the difference between the value of the two certificates. In other
Yeah.
words, creating some money out of thin air. So that was, that was obviously based on the revaluing at 3,300 in her bill. But of course, they could change that number to whatever number they like. The higher the number, the more money the Treasury gets.
Yeah, David West asks, how easy or difficult is it to convert to a gold-backed currency? If gold is reset to, say, 15,000 pounds, who's going to buy it? Well, the thing is, David West, back in the early 70s, the ounce of gold was like 17, 16 pounds. Now it's almost 2,500. I know it's been over many decades, but yeah. If it's backed by a digital currency, yeah, people can still buy gold and they'll be able to buy a fraction of an ounce or a gram. A gram would be like 5,000. No, 5,000. Yeah, it would be like 500 pounds the gram because it's five times 31. So yeah, that's what
Well,
would happen.
David, I'd say this: if gold, if it's a gold-backed currency, it's only a gold-backed currency if the backer is willing to buy that gold off you at 15,000 or sell it to you at 15,000. In other words, they're making a bid and ask at that price. Now, if the price of gold is bid at 15,000, I'll tell you, I'm going to buy it because I can't lose money. It can only go up.
Yeah, and yeah, and I think what that will do though, it's gonna create a lot of yeah, the currency is gonna be debased and prices are going to go a lot higher. But I think people's salaries and wages are going to go higher too, just like they have. It's just going to be over a shorter period of time, and they'll probably do that when things are in really bad shape, and they're already pretty much in bad shape. When you have maybe a crash and deflationary collapse, like very quick, that's when they might do it.
Well, I think prices will go higher for the same reasons they've always gone higher, which is monetary debasement, and that's the reason that gold is going higher because they keep printing money. But it's not that a higher price of gold will drag up retail prices. That won't happen. So just putting the price of gold from 3,000 to 5,000 or whatever number, higher number we care to name, that will not change retail prices at all. Because it's, although we've in our minds we say, oh, gold and retail prices they go up together, but the reality here is they're completely different things. The retail prices, yes, they will go up, but the only reason they'll go up is if suddenly everybody on the planet is getting higher wages and the cost of making things is going up. Now, that's not going to happen overnight just because the Treasury has got a whole bunch of money out of thin air. It just doesn't,
yeah.
it doesn't happen. Of course, they can spend more money on Social Security than some people have got a bit more money and they can buy a few more pizzas and iPhones or whatever they like to buy. But it's not going to, you can't, in today's world, you can't drag up the consumer price index unless the costs of manufacturing things are rising. That's cost push. Because the ability to expand the supply is almost infinite in today's world.
Yeah, I agree partly with that, Clive. I'll have to say that I think if they revalue to 15,000 pounds or $20,000, it would eventually create a lot of liquidity. The governments will have a lot
They'll
more
spend it. Yeah,
money to
yeah, they'll
spend,
spend it.
and it's going to seep through. Uh,
Yeah,
just
it
like it
will.
has, you go back to 1971,
Uh,
it was 35 an ounce, and you could buy a car for $2,000, I don't know. And
but
now,
that's a money supply effect. I
yeah,
increasing the money supply. It's not a gold price effect. So if we put the gold price to 15,000,
yeah,
let's say
but
that's five
yeah, but
five
the
times what it is. It
raising
doesn't
the
increase the money supply five times.
well, it would for the government if they revalue it because they'd get extra, they could borrow more, and by borrowing more, they can spend more, and that would increase the money supply indirectly.
So if they did it at $15,000, it would create $3.9 trillion, and I think the amount of notes and coins in circulation is something like $2 trillion. So yes, it could, if they spent it all immediately,
Yeah.
increase the money supply, pushing up prices. But I don't think. prices, when you pump money into the economy, retail prices rise slowly, asset prices like gold rise fast.
Well, I hope you're right because then people who have gold are going to do very well if
Yeah, they
prices
will.
stay. And the other thing is, you could argue that AI, the effect of AI on prices and also on employment is going to be very deflationary. So it could counteract the deflationary impact of AI.
Yes, it might welcome. That might mean that they can now give everybody a universal basic income without raising the debt,
Yeah.
which would obviously, as you say, help all these poor office workers who are about to lose their jobs.
Yeah, I'm not sure I agree philosophically and also economically with UBI, but yeah, that might be a solution temporarily because I think people need to produce something and not be given things for free, but it could be in an emergency. Don't you think, Clive?
Well, yes. I mean, I think the human nature is that they will try and produce things. So, but of course, there will always be that part of society who says, I don't have the ability, I don't have the skill set to do it, and they won't. But there will be plenty of people. So, it's going to. I just think we will end up with a situation where more people are on benefits or social support than we have at the moment as a percentage of the overall population. I think that's the direction of
Yeah.
travel because what we're seeing now is many um, companies which traditionally took on trainees, graduates, are now taking on a lower number because a lot of the work that the graduates used to do, for example, in the legal profession, they'd produce briefs for the partners. A lot of that work can now be done by artificial intelligence in a fraction of the time and with better quality than the graduates can produce. So the partners who are saying, do I really want to have another graduate this year? Actually, I'd rather do it myself in 10 minutes.
Yeah, yeah. Robert, what is it? Robert says gold will move big in September. What do you think, Clive? Will gold move big in September?
Has he got a date, a precise date, Robert?
Well, September is pretty, I mean, the month of September, I guess.
I think it'd be useful for all your listeners to know which day so we can load up the day before.
Yeah. Well, I mean, the one thing I'd say gold has been consolidating for a while, and I think maybe what happened over the weekend vis-a-vis Russia and the US and Ukraine might be quite positive. Um, Scott 49,140. Prices going up in the retail sector will be last. It will be a cause of the confidence being lost in the currency. Yeah. I mean, losing confidence in the currency, the currency will buy less. So that in itself is like makes, you need more currency to buy things. So that's higher
Yeah.
prices. It's like
Yeah, I
the
mean, you can imagine that in a particular situation, people suddenly fear that their money is not going to buy what it used to buy. They rush down to the shops to buy anything which will hold its value.
Yeah, it's like, during the when the Romans started debasing the denarius, they couldn't print, but they would put less silver into the coins. In the beginning, people didn't notice right away, but then people noticed that, wow, this coin is it's not worth a denarius. So they would raise the prices. And yeah, but like you said, Clive, it takes a little while for people to twig onto it. Someone mentioned Nazara and Gesara. Yeah, I've heard of that for for quite a few decades. I think, Clive, it's some kind of reset in the U.S., resetting the U.S. government and making it not a corporation anymore. But who knows if that's going to happen? I mean, it's been forecast for quite a few decades. What else have we got? Bitcoin doesn't do well in U.S. financial crisis, a recession. or decade-long economic downturn. Bitcoin got smacked down multiple times in the 2010s. Well, that's one of the things we don't know too much about Bitcoin. It hasn't been around long enough to for us to say how it's going to do during a big recession.
Yeah, I mean, we've had the odd recession since 2010. I don't think there's been a lot, and I don't know how Bitcoin did in that period. So, but he's talking about 2010. I thought Bitcoin was only came out in about 2010 or thereabouts,
Yeah,
so,
2009. Yeah, yeah.
something like that. So I
Richard,
don't know.
thank you for your super chat. Please comment on uh, Francis Hunt's theory of hyperstagflation. Sounds likely to me. Well, he was on last Sunday with us. He talked about that. It's basically, you know, the currency collapsing and things getting really expensive, the daily needs of people like food, energy, shelter, basic necessities being really expensive for the average person. But for the wealthy people who have assets, they're doing great. So it's basically what happened in Weimar, Germany in the 1920s, 1923. So yeah, the speculators, the people with assets, the bankers, they will do well, but the general public will suffer. So hyper stagflation.
I think for the benefit of, whilst most of your viewers are very, very intelligent people, there might be the odd one or two who don't know what stagflation is. So stagflation stands for stagnation, i.e., a slow economy, an economy which has become moribund, and with inflation. So normally in a recession or when the economy is moribund, prices should be going down. But if you're printing too much money, then the prices could be rising, even though you're not actually coming out of the stagnation or the recession or depression. So stagflation is the environment of rising prices without an improving economy. Then if you get to hyperinflation, it means that inflation is going very high, and or hyperstagflation means that their prices are rising very rapidly in a stagnating economy. I'm
Yeah.
sorry for those who, everyone, most of your viewers knew that, but I just always get
Yeah.
this question. I didn't know that.
Yeah, no problem. James Thomas says, I worked in the gem and jewelry business in 1976 and acquired many Krugerrands, which sadly I sold off in 2011. I'm slowly building up again. That's interesting, James. When I bought my first gold coins, excuse me, in 2002, they were Krugerrands. Yeah, they're the very popular gold coins. I'm sure you probably know better than I do, Clive, because I think you already started working
Yeah,
back in
yeah.
the
My
70s.
first Krugerrand purchase must have been around, well, suddenly mid 70s. It could have been 1975. It might have been a year or two later. But that was the only gold coin, apart from sovereigns, that you could buy back then.
Mm, yeah, that's right. We've got a lot more choice these days of the coins that we can buy. Uh, Someone's asking you, Clive, do you like Barrick Gold?
Yes, I don't actually own any Barrick Gold, but I wouldn't mind owning it. I've studied it, and a couple of days ago, I put up a list of my top 10 gold shares on YouTube for anybody who's interested in looking at that. Barrick didn't quite make it to the list, but it could have done. It was, it's a very good company. It deserved to be the list, but there was only enough time to put 10 of the best, and maybe Barrick was somewhere in the top 15, I would say.
Yeah, I think on Friday when we spoke, you had a chart and Barrick has underperformed. So maybe it could uh, how can I say outperform Newmont and Agnico Eagle, but
Yeah.
yeah, because it's been lagging. So things
I
things
mean, the
never
point
stay
about
the same.
yeah, I mean, Barrick has the sorts of qualities I like in a gold mining stock. It's got a lot of reserves. It's digging the gold up. it's making a profit because it's selling it at a higher price that digs it up, and it's got cash in the bank. So if it wants to buy another gold mining company or expand, it can do so. So those are nice qualities to have. The other thing you might like to have is a relatively low price earnings ratio and a relatively high expected growth, with more growth coming next year than there was last year. I don't remember the numbers of Barrick, but it certainly could have been in the top 10. Didn't actually make it on my list, but it might, when I do another list, make it. I don't know.
Yeah. Oh, changing subjects a little bit. Just wanted to show you guys this because in the UK they've passed this online safety bill, and their excuse is that it's to protect children. But I personally think children, the parents should look. Look after the children and see what they're watching. But they try to sue 4chan. I'm not sure what 4chan does. I'm sure the viewers know. And they basically said,
Someone put it in the comments because I don't know what it does either.
yeah, someone said, we're Americans, you have no control over us. Go, don't want to say the word, but yeah, basically, yeah, they're saying here, according to Press Escort UK, they're basically saying, we are an American company. It says here, Fortune is a United States company incorporated in Delaware with no establishment, assets, or operations in the UK. Any attempt to impose or enforce penalty against Fortune will be resisted in federal court. American businesses do not surrender their First Amendment rights because a foreign bureaucrat sends them an email. I thought that was great.
Yeah. I mean, I suppose this is one of the sites which, to make sure you're allowed to look at whatever they've got on there, ask you when you were, which year you were born in. And the funny thing about most of these sites, it seems that the vast majority of people were born exactly 100 years ago.
Oh yeah, 4chan. Yeah, I think yeah, it's a forum. That's right. User says 4chan is one of the oldest forums, very not PG or PC, I guess, full of hackers. Yeah,
Okay, so the people, a lot of
it's it's
the
like
the younger population can't deduct the number 18 from 2025. So when they ask when they were born, they put 1925.
okay, yeah, it's like Reddit, I think. So yeah,
Okay.
over here says nanny state. I think it's worse than a nanny state, and we could get in trouble even talking about this. I think it's more that they want to keep track of people, and their excuse is that they're trying to protect, you know, uh, under 18s or under 16s.
Let's say someone says not very PG. I don't, parental guidance, I suppose that
Oh,
means, or something. I
PG,
don't.
yeah, yeah. Uh, where's Hunter? I'm not sure what he means by where's Hunter. Uh, G8UBJ says now I simply use Proton VPN. Yeah, VPNs can help you hide, but they're even talking here, Clive, that they might ban VPNs because of that. So,
I don't see how they can. I
no,
mean,
yeah,
uh, I mean that's even people even in China where you're not supposed to get out of China. People use VPNs to get around it all the time.
yeah, yeah. So let's see what else. Oh, yeah. So Clive, let's talk a little bit about the markets. So do you see this melt up in the stock market continuing, or do you think we're going to turn around? Because all the metrics are so high. They're like historic levels, and or do you think it's telling us we're going to have a because in the 1920s in Germany, when they had the hyperinflation, stocks kept going up because people wanted anything but the currency.
Well, we're 5 years into a bull market of just about everything, every tangible asset, including stocks. And it's a brave man who says it ends tomorrow. But what I can say is that the we as of last week we had a new situation for the first time ever. The top 10 stocks in the S&P 500 for the first time ever represented 40% of the value of the S&P 500. What's the significance of that? Well, a lot of people have come to realize that those top 10 stocks are rather overvalued. So they say, oh, I won't invest in those. I'll be more diversified. Let me find a good fund. And they speak to their advisor. The advisor says, oh, you should buy this S&P 500. It's gone up by X% a year for the last 150 years, or whatever you like. And so they say, oh, that sounds like a good idea. I can't go wrong with that, diversified. But what they don't actually realize is they're buying the very stocks they didn't want to go into because they were overpriced. Because when they put money into the S&P ETF or any large ETF which tracks World Index or anything else, they're heavily exposed to those top 10 companies, very, very heavily exposed. And those top 10 companies, by normal standards, by normal valuation standards, are rather overvalued. But I stress this doesn't mean to say they can't keep going. So I'm not going to bet on a crash happening next week. But what I am going to say is if we get a bit of bad news, because they're so overvalued, the wind could come out of its sails very, very quickly. And the bigger you are, the harder you fall. So my advice to anybody who's invested in that particular sector, you may love it and you may not dare to come out of it because there's a lot of wind behind the sails, but just think about taking a little bit of profit off the table and moving it into the tiny, tiny sector of the market, which is the gold mining sector. Any one company in those top 10 companies is on its own many, many times bigger than the entire gold mining sector. The gold mining sector is $690 billion big. Microsoft, for example, is 4 trillion, 6 times
Yeah.
as big as the entire gold mining sector. And that applies to companies like Walmart, Oracle, JP Morgan Chase, and of course, Nvidia and Apple and others. All these companies individually are many, many times the gold mining sector. So you probably got huge profits holding these companies or the ETF, which has got them in it. Take a little bit of money off the table from that very overpriced sector and start to put it on the much cheaper gold mining sector, which is a tiny sector because it will only take a very, very small change in sector rotation to push that sector massively higher. And the mining sector is very cheap at the moment, very cheap.
Yeah, someone is asking here whether the police can come uh, in your house without a warrant in England. No, they can't. I mean, but it's they're getting warrants much more easily with all these new rules and regulations. But no, they can't just come in unless they have a warrant. I still think that's the way it's done.
Has
They
he got someone at the front door right now trying to get in?
I don't know, but there's a question here from GY2702. How can we avoid UK capital gains tax when selling gold or silver physical? Well, the you can, I mean, coins of the realm, i.e., gold sovereigns, Britannias, both gold and silver are exempt from capital gains tax. So you're not avoiding anything. They're considered money, so there is no tax. What you might, it's only foreign coins and bars as well that you have to declare for capital gains. So, I
So,
mean,
Mary, if I was in England and bought, let's say, £50,000 worth of UK sovereigns, as an
yeah.
example, and then a year's time or 5 years' time, I sell them for double what I paid for them, even though I've made a massive gain, I would have no tax to pay. Is that the UK situation?
Yeah,
It's brilliant.
yeah, I know. That's one good thing about the UK because I think in the US, even if you buy US gold coins, you have to declare and pay capital gains.
Mary, I've heard something else. In the UK, you can put gold into a SIP, a self-invested pension scheme. Is that tax-free?
The SIP, no, it's not tax free. The SIP,
Okay.
yeah, it's when you put the money, they give you a kicker, but when you you take your pension out, they will tax you. well, they give you 25% of it. You can take out tax-free, and the rest you pay. It's like an income, so you're gonna pay the tax. Like they give you a 40% kicker when you buy it. But I'm not sure
Hmm.
about the SIP. Gold Investments, they do SIPs if people are interested. And you can talk to Oliver there. There's a link in the description about gold investments. And I guess if you hold sovereigns in the SIP, it might not be capital gains tax, but I'm not sure. You have to check that. Clive,
What sort of sovereigns do you like, Mario? The old ones or the new ones?
doesn't matter.
Mm.
I've got sovereigns from the 19th century, like Victoria's, and I have the new ones. So I don't really have a preference.
I like the Victoria ones.
Yeah, they're nice. I also like the 1960s and 70s Elizabeths. They're nice as well. They look a bit more yellow, but I think this year is going to be the last year where they're going to take the copper out of them, and I think they're going to go back to looking more yellow than like copperish.
Oh, okay.
Yeah. Clive, yeah, guys, it's time for us to say goodbye. We've gone over the hour, but Clive, thank you for coming on, and I'd like to thank all the viewers as well for being here and participating, and wish everyone a good week. I think the world is going to continue to be very chaotic and turbulent. So I think that's going to continue to help assets like gold and silver. Clive, any final words?
Well, thank you very much, Mario. Thank you to all your listeners. If anybody wants to know what gold miners I'm buying, look at the video I did a day or two ago on YouTube under Clive Thompson,
Yeah,
and you'll get some ideas. And don't forget, the markets are going to open in a few hours, 2 hours, I think, 1 hour,
yeah,
is it?
yeah.
2 hours.
2 hours. Yeah. Okay. Uh, okay, I've turned it off.